Motor vessel Toska, vacate your engine room. Vacate your engine room. We're prepared to subject you to disabling fire.
The U.S. Navy attacks and boards an Iranian flag cargo ship as the Strait of Hormuz remains closed, with Iran setting out a new fee. Oil and gas prices rising as a result, and the dollar firmer as hopes of easing tensions fade. Live from Sydney, I'm Paul Allen, and this is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, Iran says it's not planning to attend the next round of talks with the US as President Trump sends negotiators to Pakistan. The US blockade and ship seizure raising risks. Morgan Stanley says strategists say investors should trim Asia and emerging market equities as US-Iran tensions spike again. They're seeing limited upside after the recent rebound. But BNP Paribas Asset Management argues investors should stick with their positions as she sees any de-escalation sparking a broad relief rally. Ecaterina Bigos joins us just ahead. Plus, South Korea's President Lee begins a 3-day India visit and is set to meet Prime Minister Modi in New Delhi. Talks cover shipbuilding, trade and AI as the two countries consider a strategic partnership. Our top story today, President Trump says the US has fired upon and seized an Iranian-flagged cargo ship in the Gulf of Oman, and the first major encounter in the week-old blockade. Trump said in a social media post that the ship, the Tuska, tried to get past our naval blockade, and it did not go well for them. Meanwhile, Iranian news outlet Press TV says the country's military command would respond to the US action soon. Let's get to Dubai now and get to our Horizons Middle East and Africa anchor, Jemana Besetche. Jemana, thanks as always for joining us. Can you tell us a little bit more about that encounter in the Strait, the ship that was boarded? What more do we know?
Yeah, well, it caps a weekend of chaos around the Strait, really. Multiple conflicting messages coming through from both the U.S. and the Iranians. But the latest, of course, overnight news from Central Command. They put out a post saying that they had actually boarded and seized an Iranian-linked vessel known as the Tuska. That is the one that you were just referring to. This after giving them 6 hours, they say, of warnings, telling them to stop and to stop approaching the Strait. They then ordered the ship to evacuate its engine room before firing several rounds into that engine room to disable it. And they've now boarded the vessel and taken control. This is according to CENTCOM. And Trump also saying in a social media post that the Tuska tried to get past the naval blockade. It did not go well for them. In retaliation, we are hearing that the IRGC are preparing some form of a response. Unclear what that response is going to look like now. But the takeaway here, Paul, is that the Strait is clearly not open, clearly still dangerous to navigate. We're seeing very limited activity, and on both sides, what we're seeing is the stances are respectively hardening, because not only is the U.S. now implementing its blockade, it's actually going one step further and seizing anyone or any vessel that seems to be testing them. And on the alternative side, you're seeing the Iranians threatening any ships not to comply with U.S. instructions, saying that they have to adhere to Iranian instructions or else. So this is a very delicate situation. And of course, it sets the pretext for what is supposed to be a weekend or an upcoming week, rather, of negotiations in Islamabad over the next couple of days. We'll see whether the events over the last 24 hours will torpedo any momentum that is being pushed forward on the diplomatic side.
Yeah, can you tell us a little bit more about that? Because, the ceasefire is due to end this week, but Iran saying it might not even show up to talk. So what is the current status there?
That's right, Paul. So over here in the region, the ceasefire technically expires Wednesday morning. That's Tuesday evening U.S. time due to the time differences. And what we understood from over the weekend from White House reporting, even President Trump himself, is that another round of discussions will take place in Islamabad. There were some questions as to whether the Vice President, J.D. Vance, will be attending. White House official has told Bloomberg that J.D. Vance, Steve Witkoff, and Kushner should all be heading towards Islamabad as soon as tonight, so to be there for Tuesday. And then, again, we heard from the Iranian Speaker of the Parliament, Mohammad Ghalibaf, over the course of the weekend. This is before the Iranian vessel was seized. And he suggested that even though the gaps were very far apart still on both sides, there was still room for progress on these talks. But as you say, front of mind is going to be the situation on the Strait, the seizure of that ship, and then beyond that, of course, the nuclear file, and whether really the two sides can come together to bridge the disagreements in terms of uranium enrichment. Trump seemed to tell a reporter over here at Bloomberg on Friday that Iran had agreed to a zero enrichment policy. Unlikely at this point, given everything that the Iranians have said over the weekend, that is going to be an acceptable outcome for them. And if they do accept limited time enrichment, how long is that time going to be for? And then you have the other big question of the proxies in the region. And here we're keeping a very close eye on that ceasefire that was announced between Israel and Lebanon's Hezbollah over the course of the weekend. That ceasefire is looking a little tenuous as well. And so still multiple issues on the table as we head into those Islamabad discussions, and indeed no confirmation as of yet that the Iranian side will also be there. That the expectation, of course, is that they will.
Yeah, and what's the current status of the Strait of Hormuz? I mean, it is closed, but it was a very chaotic weekend. It was open for a while. We saw some evidence there of the US blockade in action, but Iran also running a blockade, which begs the question, wasn't Iran's navy supposed to have been destroyed? Apparently not.
Yeah, well, you raise a valid question. And I thought, it was interesting on Friday afternoon that the Iranian Foreign Minister Abbas Araghchi actually put out that post suggesting that the Strait was open to commercial vessels. And that prompted a flurry of responses out of President Trump on Friday afternoon, thanking Iran. He even called it, mistakenly, he referred to the Strait of Hormuz as the Strait of Iran, something which obviously wouldn't have gone down well, given that he's been saying, and many nations around the world have been saying and asserting for the past 7 weeks that no country has ownership over the Strait. But he went on to say afterwards that the U.S. were going to keep their own blockade in place. And of course, that did not go down well with the Iranians, with the IRGC Saturday morning suggesting that as long as the U.S. naval blockade stays in place, their own blockade would also stay in place as well. So effectively what that means, Paul, is there are two blockades going on at the same time. It is still unsafe for vessels to pass through. And you just saw multiple incidents over the weekend. Two Indian vessels reporting gunshots and reported attempted gunfire at their ships. They were told to turn around. We had multiple vessels trying to attempt the crossing, but then turned around as well, changed their minds. And of course, the seizure this morning of CENTCOM of that Iranian-linked vessel. So still a lot up in the air, and we know that there are hundreds of vessels still situated in the Persian Gulf waiting for safe transit. That they haven't been able to do so, and we're talking about thousands of seafarers and of course major disruptions still and a clogging up of some of the key arteries of the worldwide energy system.
All right, that's Horizon's Middle East and Africa anchor Jemana Besetche there. Thank you. Well, our next guest is an expert on the Arabian Peninsula with a focus on the region's political economy, energy politics and state-society relations. And joining us now from Canberra is Jessie Moritz, Senior Lecturer at the ANU Centre for Arab and Islamic Studies. Jessie, thanks so much for joining us today. And I just want to ask you right off the bat, I mean, what is your evaluation of how and when this conflict ends?
Look, at the moment, things are incredibly tenuous, as your reporter previously just covered. The start to the potential talks in Islamabad are already not going well, with Iran failing to confirm that they will be there and they will be participating in these talks. There's very likely very active back-channel negotiations going on between Iran and the US at the moment, and Iran may be trying to exert some last-minute concessions. What we have is two actors, both of whom seem to believe that they have the strategic upper hand in this conflict, and that makes them very unwilling to offer the type of concessions that you need to get a real ceasefire agreement. The other thing that I'm paying particular attention to is whether Iran is going to prioritize trying to trade their one key tool of leverage which they have, which is control of the Strait of Hormuz, for relief from the US blockade, or whether they're going to try to trade that in exchange for a stronger and more realistic ceasefire in Lebanon. So I'm watching both of those things actively at the moment.
Well, another key card that Iran has is, of course, its nuclear program and the whereabouts of the 400 kilograms or so of uranium. Do you really expect, though, to Iran to give up this bargaining chip and its nuclear aspirations? Because if nothing else, this whole experience has proven to them why they want a nuclear deterrent in the first place.
I think one of the challenges that we have here, particularly because so much of the senior leadership has been assassinated, is you're dealing with the hardline elements of the IRGC that remain. And increasingly, they're determining the foreign policy and the strategic and wartime decision-making that Iran is making here. And that makes them less and less likely to offer concessions. Now, there could be one potential outcome is sort of what I would call maybe a weak deal or a weak extension to the ceasefire, however it's named, just to prevent the worst case scenario, which is an active resumption in active warfare between these states. But that would really rely on Iran promising in some way to stop nuclear enrichment. It's not really necessarily a believable promise that could be trusted by the US. And even within Iran, there's a great deal of internal disunity right now between some of the negotiators who are looking for a diplomatic resolution with the US and the elements within the IRGC, which see that in 2025 they agreed to ceasefire deals, they agreed to a nuclear deal before that, and then every time they've ended up being re-attacked by the US and by Israel.
How long do you think Iran is able to continue with this conflict and also support its regional armed groups?
So for its regional armed groups, I would say that sometimes we underestimate the extent to which they can survive for a sustained period without central Iranian control. So Hezbollah accepts and has significant support from Iran, but they also have their own sources of financing through smuggling, drug trafficking, have sort of an extensive criminal network that extends far beyond the Middle East into Latin America, Europe, other parts of the world. The Houthis in Yemen, they were able to sustain their activities in Yemen well before Iran was a major supporter of their actions. So I think for the proxies, anyone who's suggesting that Iran cutting them off, even formally in terms of a deal, which they're very unlikely to do, would mean that those proxies would be less able to act in the regional arena, I think are not being particularly realistic. This is not a conflict that's going to be easily resolved, unfortunately.
Well, at the start of this war, President Trump encouraged a popular uprising, saying words to the effect of, "You will never have a better chance than this." So is there any evidence at all of this happening, and how risky would it be under the circumstances?
I mean, if you consider the experience of an average Iranian civilian during this conflict, they've been actively bombarded, they've had their electricity and civilian and water infrastructure attacked. One of the most likely outcomes following conflict in this region is that the regime then goes on a crackdown against domestic political opponents. Some of the extreme rhetoric that Trump has been offering, suggesting that he wants to destroy Iranian civilization, doesn't really help opponents of that regime who are trying to garner support for the US and believe that he's coming to rescue them. So I think the steps that you would take to try to empower domestic opposition are very different to what we're seeing on the ground in Iran. And you wouldn't expect large-scale popular mobilization during an active wartime effort. It's more about the years that follow. And the high inflation that Iranians are experiencing and the suffering of this conflict is likely to generate resentment. But I'm not seeing any indication that there is capability from the domestic population to, say, overturn this regime, particularly when the most likely outcome of this conflict is a surviving but extremely damaged and dangerous Iranian regime that's likely to try to repress its domestic opponents.
Yeah, well, the blockade by the US is intended to put pressure on Iran, and if Iran's unable to get oil through the Strait of Hormuz, can you foresee this conflict escalating in unpredictable or asymmetric ways?
I think definitely in asymmetric ways, not necessarily in unpredictable ways, because a lot of the steps taken by Iran and other actors in the conflict are being very clearly telegraphed. So, for example, the Houthis in Yemen have very clearly stated that should conflict resume, that they would target the Bab el-Mandeb Strait and the Red Sea shipping. That's a signal that you've also seen coming out of Iranian messaging. So if that were to happen, it would be an enormous escalation in hostilities, but it wouldn't necessarily be surprising. Israel has signaled on their side that they are gearing up to, if the hostilities increase, that they would target Iranian energy infrastructure. Iran has tended to respond in kind in the Gulf states. It's not a great outcome for the Gulf. And I think we have to, at this point, put a lot of hope in some of the Pakistani negotiators, some of the talks going on between Qatar, Saudi Arabia, Pakistan, and Turkey, in the role of China and other actors who are pushing for a diplomatic outcome, because the alternative is either a weak ceasefire deal, which will continue this sort of disruption and this halfway Schrodinger's Strait of Hormuz. It's both open and not open, or officially open and practically not, and have the real risk of widespread return to hostilities in the region.
Well, you've one of your areas of study is attacks on oil infrastructure in the Middle East. How does this situation compare with others that you've looked at, and what are the implications for global energy security going forward?
So one of the things that the Gulf states, Saudi Arabia, UAE, Qatar, these major energy producers have been well aware that they're very exposed to the Strait of Hormuz, and they had been trying for decades to build alternative supply routes. That's why we have the East-West pipeline crossing Saudi Arabia, and it's why we've seen so much oil supply be able to be moved out through Fujairah port, even as the Strait of Hormuz is closed off. It can't fully fill the gap, but it has helped, and it's been better than nothing. So what we've seen in response to this conflict in the immediate term has been the Gulf states looking much more seriously at alternative supply routes for oil and gas out of the region. But globally, this is hastening the renewable energy transition. And the states that have been able to turn quickly or build up renewable energy supplies or alternative energy supplies nobody's doing well out of this conflict, but they're doing less poorly, and they're going to be better positioned for what is likely to be accelerated as a result of this conflict, which is a shift to a new global energy order increasingly centered around renewable energy. That's really the smart step for countries to take in response to this conflict, is to diversify your supply chains around energy and to shift away from dependence on oil imports, because the likely geopolitical impact in the Middle East region, particularly as Israel continues its rise as a regional hegemon, is increasing disruption to the region as a result of continued conflict.
You say it's the smart step. Is it necessarily the inevitable step, though? Because can you imagine a scenario that once the flow of cheap oil resumes, the memory of this experience fades quickly?
And not just that, but also in the short term, states face incentives to double down on non-renewable resources. So even here in Australia, for example, there's calls to look at Australian energy refining capabilities, or does Australia have oil supplies that we should be investigating. Many countries around the world are discussing nuclear, so it's not inevitable, but it is the fastest and cheapest way to reduce your exposure to non-renewable supply from the Middle East. And not just the Middle East, but from other regions in the world where we have trade choke points that are increasingly likely, because Iran has demonstrated how effective it is to seize control of those trade choke points, to make sure that most countries should be thinking very carefully about how they're going to respond to increasingly disrupted international trade. This is not the first disruption we've had. This is the fourth major disruption to international trade, between COVID, Russian invasion of Ukraine, the war last year in Iran, and then this year.
All right, Jessie Moritz of the ANU Centre for Arab and Islamic Studies, thank you so much for your analysis today. Coming up, we're going to hear why former US Defence Secretary Mark Esper thinks it might be harder to get a deal done between the US and Iran. That conversation up next. This is Bloomberg. Welcome back. You're watching Insight. Former US Defense Secretary Mark Esper says US-Iran talks remain stuck over nuclear enrichment, fuel returns, and, of course, control of the Strait of Hormuz. Esper told us that sharp rhetoric and threats are part of President Trump's strategy to pressure Tehran into reconsidering its positions.
Well, first of all, that's his negotiating style, right? To threaten and to amp up the rhetoric and maybe force them to step down or at least reconsider their position, the Iranians. And so he's going back to where he was just about a week ago, I think, in terms of timing. So that's not surprising. You know, this question with regard to war crimes, it all depends on how the planners, the targeteers, and the lawyers look at different targets, whether it's a power plant or a bridge or a highway, and how close its connection is to the military. So, for example, if you have a power plant sitting on a military base, powering that base, then it's a legitimate target. As you get further and further away from such direct connectivity, then it becomes more dubious. And so I think the military is going to have to work through all those different issues, case by case, target by target, to come to that final understanding, if indeed that is where the military goes in this next phase.
I think the thing that has led to a lot of the fogginess we've experienced over the last 36 or 48 hours is just not being able to get a sense of the degree to which what the president is saying the Iranians have agreed to is in fact what they have agreed to. And you know well the difficulties of engaging in any kind of diplomacy or negotiations with the Iranians. Of course, you were in the first term when the president pulled out of the JCPOA. Talk a bit about that, if you would, the way the U.S. can verify what in fact the Iranians are actually saying they're doing, what they have done. Yes, perhaps this will be haggled out over the table there in Islamabad, but leading up to it, how do we know what we know, to ask a very basic and cumbersome question?
Yeah, look, it's tough. I mean, obviously, the president raises expectations with some of the things he says. Maybe he's picking up spot reports from his advisors, which maybe is missing some nuance. But nonetheless, the expectation was real. Or as the president's been saying, that we're very, very close to a deal, that they want it really badly. And then what you hear coming out of Iran, as recently as the last 24 hours, where the lead negotiator, Speaker Ghalibaf, has said, yes, progress was made in Islamabad last week, but we are far from there are significant differences between our negotiating positions. Now, he's the lead negotiator, and I'm paraphrasing. And so, but that shows there's a much bigger gap. Now, look, I'll also say that what the Iranians say publicly to the West and what they say privately to their own people are two different things, because they're trying to manage a domestic audience. So it is hard to parse through what's going on. But when I look at each side's negotiating positions, going back to the 15 points proposed by President Trump and the 10 points proposed by the Iranians, I just see few areas of agreement. The big issues, there's a major disagreement when it comes to nuclear enrichment, when it comes to returning the nuclear fuel, when it comes to what's going to be the future of the Strait of Hormuz. I mean, when we talked yesterday about what the foreign minister said and what the IRGC is saying is the new normal they want to establish is that they have sovereignty over the strait, and they will control and manage who goes through, and they will impose tolls, much like what happens at the Panama Canal. And that's clearly something we, the West, cannot tolerate.
Let's take a quick look at where some of the key benchmarks are sitting at the moment. The oil price, obviously, we've got Brent at 95.29 at the moment, pretty much exactly where it was this time last week. We've got gas futures, meanwhile, for Europe ticking up by about 5%. In terms of equities, though, really shrugging off for all of this, very much a risk-on tone, particularly when it comes to Taiwan, best index in the region, better by 1.3%, and its tech stocks leading the way across all those major indexes. The Hang Seng also better by 0.8%. Still to come, our next guest says prolonged and elevated energy costs remain a key market risk. Ekaterina Bigos of Paribas Asset Management joins us next. This is Bloomberg. Welcome back. You're watching Insight. Most hedge funds managed out of Asia were in the red in March. According to a note by UBS Prime Brokers, median stock hedge funds lost between 4.5% and 6.2%, and the median macro fund slid 6.9%. Of course, it comes amid extreme volatility in global markets, with the news of war escalation or ceasefire negotiations changing constantly. For more, we're joined by Asia investing reporter David Rumley. David, talk to us a little bit more about March. It was not a great month for hedge funds in Asia. Can you tell us some of the details about what we saw there?
Well, we saw, as you said, a lot of volatility. I think the war hit a lot of folks in the wrong direction. Most people didn't hedge properly going into the month. We also saw a lot of volatility in areas like the Korean equities markets. European rates also affected quite a few. All in all, some of the funds reported their worst ever performance for a month in March, although it's worth noting that many have since started to bounce back.
So you talk about them bouncing back. How have they changed their positioning, and what's the outlook looking like?
Well, there are a variety of means. Ironically, despite the U.S. Arguably causing the war, many have chosen U.S. equities as a safe haven and shifted their holdings away from Asia in a small sense and towards U.S. equities instead, expecting it to remain resilient despite the pressures.
All right, that was Bloomberg's Asia investing reporter David Rumley there. Joining us now is Ecaterina Bigos, CIO for Core Investments Asia, ex-Japan at BNP Paribas Asset Management. Ecaterina, thanks a lot for joining us today. I just want to ask you, do you feel like in this very volatile environment that David was describing there, that markets are pricing risk appropriately?
Well, I mean, I think the markets are pricing some level of risk, but markets are still operating under assumptions that oil will revert anywhere between 80 to 90 somewhere by the middle of the summer. And I think if you look at the investor positioning, even when we came into this conflict, but importantly, if you look at the end of last week, investor positioning actually has improved. So it's become less bearish. But even from the beginning of this conflict, we have not seen significant amount of capitulation around the market. So the investors have adjusted their positions. They've hedged their portfolios, but we have not seen a significant selling off, again, because the markets are expecting, suggested by empirical evidence, that this will de-escalate and oil will revert around 80 to 90, right, at some point, I say, to the summer.
So can you tell us about the sort of strategies you're using to navigate this volatility and all the geopolitical uncertainty?
Well, I think one observation during this period of volatility and I would say into kind of the escalation through this entire conflict, but particularly for the last 2 weeks, we call it the structural advantage. The places of the market that have re-rated the most are the ones that have benefited, or at least perceptively benefited from structural drivers of growth. And if you look in the US, you look in Asia, and again, you look in other global parts of the global markets, places like tech supported by this AI capital expenditure have benefited from that structural advantage and have re-rated by a higher magnitude, and I expect it to sustain as we go into the year end. Even the longer term performance I expect to be supported because of that investment and deployment into the AI. And then also we had places like Europe, the European strategic autonomy, which is related to defense spending, cybersecurity, and general independence with regards to their defense, have done fairly well and have performed very well during this period. And last but not least, I would say this is something that has emerged a lot more during this conflict, is the need for economies to become a lot more energy sufficient. And we've seen the desire for various governments to deploy into renewable source of energy, whatever that's nuclear, whatever that's solar, whatever that's wind. Again, that deployment into driving diversified source of energy is certainly going to, it's a re-emerged structural theme that we think is going to sustain as we go into year end and beyond.
Yeah, and that's a very interesting point as well for oil prices longer term. How do you see them evolving for the rest of the year in the context of diversification of energy sources? Do you see some potential for demand destruction happening here?
Well, I think the demand destruction, it's different. I think demand destruction is not necessarily driven by elements diversifying energy sources. I think the biggest risk to the markets, as I said, they're operating in the scenario that the conflict will de-escalate. But a prolonged oil prices, elevated at oil price, high oil prices can lead to the broader demand destruction, which is not related to, let's say, supply, but it's related to demand. So again, the growth in some of the economies could be subject to revisions. And again, could lead to oil prices from that supply element. With regards to from that demand element, with regards to the supply, again, it's a source of diversification away from oil. And again, increasingly, we'll see less attention to sourcing energy from oil and gas, and more increasingly sourced from other renewable sources. Which again, this is going to be related to the kind of the supply part of the equation. But I'd say longer term, that's a more longer term, because it takes time to realign into that diversified source of energy.
Can you talk to us a little bit more as well about what you're seeing around inflation? Because it's not just energy prices as well. I mean, a lot of fertilizer, most of the world's urea comes through the Strait of Hormuz. It's going to have implications for food prices. What does this mean for the global inflation picture and how consumers respond?
Well, and I think this is particularly for the emerging markets, and I think what we'll see to the year end is really a divergence in economies in terms of the growth trajectory, but also the response from the policy makers, and that largely driven by how the inflation will manifest in each of the economies. And again, the dependencies of oil are different to each of the economies, but importantly, the implication and how much weight the food has in the composition of the CPI, for instance, will be a driver and how the decision will be formulated. We know like places like India, for instance, that takes a big part of the Indian kind of CPI numbers. So again, it will be increasingly, we'll see a divergence in how the monetary policy will respond based on that divergence in terms of growth and inflation implications.
Yeah, well, let's talk about how monetary policy might respond in the US. I mean, Fed easing just keeps seeming to get pushed back down the timetable further and further. Do you see any easing in 2026?
I think, Fed is definitely into wait-and-see mode, and this is not just the Fed situation. I think this is central bank situations across the globe because the uncertainty is still very high. We don't know when the conflict is going to end, but it's not just about the ending of the conflict. Is when the oils will revert to the levels that are, again, becoming less of a risk to the inflation. And ultimately, when it comes to the Fed, it has a dual mandate around employment and around the inflation. The inflation has stayed elevated. It has not been a target for now almost 5 years. So again, it's an equation that needs to be paid attention to, and that's going to keep Fed in some level anchored around staying put and watching where the inflation is going. Now, the part that could lead to a potential cut, potentially in the latter part of the year, if we see this kind of conflict sustaining for a longer period of time, and we're starting to see implication on growth, and again, growth being deteriorated because of that conflict, and we need to see potentially could see a reaction function from the Fed to support that. But I would say latter part of the year, that's potentially plausible. Yeah.
To your point on growth, is stagflation something that you think about, and does it inform your decisions in any way?
Well, certainly it's a risk scenario, but again, it's not a central scenario at the moment. Majority of the market participants, again, have not altered the fundamental picture because, again, the conflict has not gone for a sustained period of time. Again, to have an alteration of this macro sphere, we need to see a sustained period of oil prices being elevated, and then we need to see an inflation the inflation expectation be disanchored, and a reaction function from central banks, particularly for the Fed. Now, none of those elements have materialized yet, but of course it's a risk that market needs to calibrate, and the longer this sustains, of course the market will start to price that in. But at the moment, as I said, the market is not pricing in that worst case scenario.
You mentioned a moment ago policy divergence among central banks. I mean, what's your outlook for the US dollar for the rest of the year, and some of those other major currencies as well? Like we're seeing the yen making a bit of a comeback at the moment when it comes to carry trade preferences.
Well, I think this is driven, again, by repricing of the monetary policy expectations to some degree. But I think we heard from your colleague earlier, U.S. still has benefited, but particularly now during this period of uncertainty, is benefiting from reversal of flow into the U.S., which plays an equation or plays an element into the equation of kind of the strength of the dollar. So again, the U.S. has benefited from that re-rating, positive re-rating that we're seeing in periods of de-escalation. But again, it's been somewhat, we've seen a bit of recovery. Again, the market indices have recovered because of that sense of de-escalation of the conflict. But importantly, some parts of the market that I talked about that are structurally supportive have benefited from significant inflows. And that has been the case for U.S. But also when it comes to this capital expenditure in AI, the supply chain sits in Asia. And one of the countries that are providing that supply chain is Japan. And Japan, again, has benefited from some investor flows. Again, but we need to be very acute to the fact that this has been focused on certain parts of the sector and certain sectors and parts of the indices. Again, it's not been a uniform kind of re-rating, or at least the re-rating in that part of the market has been by a larger magnitude.
Yeah, it's important to remember that. I'd like to dig into that AI story a bit more with you. When you're putting money to work in that space, where do you go? Do you look to Japan or Korea or the hyperscalers or somewhere else entirely?
Well, what we've seen from beginning, I would say the mid of 2025, I mean, hyperscalers were pretty much the cornerstone since the ChatGPT was innovated. Everybody has deployed into the hyperscalers. Now, from mid of 2025, what we've seen is a broadening of that AI story into real industry. What does it mean? Is hyperscalers now are spending. They're not generating necessarily significant revenues from the AI story, so they're the ones deploying the capital. And the capital is going into the sphere of building that compute capacity and is benefiting the real industries, the companies that are providing the grid, the infrastructure, the electricity, the energy. So that broadening of the equity market is another theme that we're looking at. So again, it's not just hyperscale, but paying attention to where they're spending and how it's benefiting the real economy.
So if you're looking at tech, do you go to China at the moment? Because Chinese tech stocks seem to be playing a bit of catch-up at the moment. Is there anything there that you like?
Well, I think that China is definitely part of the tech story, and I think what we've seen since the beginning of last year with their own innovation with DeepSeek is that the leadership will come probably from a diversified source, not just the US. So again, China is driving its own tech story. But again, we need to be cognizant about the supply chain restrictions that China has and the ability for them to continue to drive that forward. That's one element. The second is as well, when it comes to that monetization and the ability for those models to be deployed at a large scale, but again, not to the consumer, but to corporation governments. We do think that the U.S. probably stands to benefit into larger scale because, again, the likelihood of developed markets employing an AI model that is U.S. generated is probably more likely than a Chinese generated. So again, when it comes to the China story, it's its own insulated story with regards, for at least for now, with regards to the AI development. And again, there are its own players that we selectively look at as well. Again, valuations are probably arguably a little bit more attractive than when they are in the US.
When you're talking about attractive valuations, do you look to India as well? Because it's been pretty beaten up this year, but the past couple of weeks, we've had a couple of good weeks. Foreign buyers also returning to India. Is the floor in here? Does it look like a buying opportunity?
Well, I think it's quite a different when we look at, and again, I talked about valuations in China being attractive, but again, the flows or the attention for China specifically, it's coming to that tech sphere for now and what the policy is focusing. Now, if I had to compare India, for instance, when it comes to India, it has not benefited or it does not have any structural drivers of growth at the moment. So they have not participated in the AI story. They're not part of the supply chains. And as I said, at the moment, where the re-rating is happening is on those structural opportunities. And India, it's not part of that structural opportunity set that I've talked about on a global basis. And then when it comes to monetary policy and fiscal policy, is restrained. So, and then you have on top of that the oil shortages, and you have, of course, some of the tariff uncertainty that still lingers in India. So I would say India on a relative basis, because it does not have catalyst, is probably less attractive. And as I say, relative to China, but again, China, we need to be focused on specific sectors. It's not a uniform kind of bull opportunity for China economy or China equity markets at the moment.
All right, Ecaterina Bigos, CIO for Core Investments, Asia ex-Japan at BNP Paribas Asset Management. Thank you so much for your time today. Let's get you to New Delhi. We've got some live pictures here. Prime Minister Narendra Modi just greeting South Korean President Lee Jae-myung. This is the first visit to India by a South Korean president in 8 years. A good time to visit too. It's going to be their third in-person meeting. They have met a few times before. They are meeting to discuss global supply chains, energy security as well, unsurprisingly, but also looking to expand cooperation in other strategic areas. That includes shipbuilding, maritime industries, finance, artificial intelligence, and defense as well. Let's get over to Sudhi Ren, who joins us to talk about this. So, Sudhi, can you tell us a little bit more about this agenda that President Lee has while he's in India, where the areas of overlap are?
Well, to begin with, we'll see discussions, commitments that are going to come from both sides on working closely, expanding trade. And mind you, expanding trade is very, very important because for India at least, the U.S. relationship is really not working, or is in a bit of a lot of difficulty, if you can put it that way. So India is looking out to widen its net, widen its partners, look out for alternative markets. So that's one. The strengthening the ties and increasing trade. In fact, we are getting to hear some figures of trade being increased to about $50 billion. more clarity is going to come after the meeting. We're going to hear about what target has been fixed, by about 1 o'clock today, India time. Moving on, what also we're going to see is commitments to work more closely on defense, critical energy, critical minerals, and also green energy. These are the key factors or key areas that we get to hear are the focus of the two sides. It is very, very important because, the India-South Korea relationship has kind of underperformed because South Korea being a developed economy, India looking out for, tech investments to ramp up its own manufacturing, that this bilateral relationship hasn't really developed. And the hope is that with this bilateral meeting between the two leaders of the two countries, there is going to be a push and perhaps there is going to be more momentum in the relationship.
Well, there is a sizable business delegation accompanying President Lee as well. Can you tell us who's there from South Korea and what sort of opportunities they might be pursuing?
So we have the who's who, including the CEO of Samsung traveling with the president to India. And there is a business summit that is there, and we're going to see India's trade minister, the president himself, addressing this. From the business side, there is going to be commitments. Both sides are going to reach out to each other. We're not yet sure about whether there is going to be any concrete announcements, investments that are going to be made or going to be announced. But the very fact that there is this huge business delegation coming in from South Korea, and then there is this hunger in India for not only new tech to come in or expand manufacturing in India, and so to say use the demographic dividend that is there is important, and we are expecting at least commitments to come out of that meeting as well.
What sorts of conversations might we expect around energy security as well?
Well, energy security, number one, India, faces a lot of hurdles when it's looking to ramp up its own green energy, supply chain. And although there have been, Indian businesses have reached out to China, the India-China relationship remains very, very unsettled. It's a piece that is very fragile between the two countries, and then that is exactly the space that India is kind of expecting and hoping that South Korean technology, South Korean companies can help India kind of if not bypass, but at least supplement and help Indian green energy companies.
All right, Bloomberg government reporter Sudhi Ranjan Sen there in New Delhi, where President Lee is meeting with Prime Minister Narendra Modi. While we were talking there, we did have India markets open for trade for the start of the week. We do have markets around the region higher at the moment. We did have Indian stocks have a pretty good 2 weeks in the past couple of weeks as well. 2 weeks of gains, which we haven't seen for a while. Bit of a softer opening, though, here today. The Sensex pretty much flat at the moment. Same story for the Nifty Bank Index, and we will be keeping an eye on some of those banks. ICICI had a beat, strong loan growth. It had its net income jumping 8.5%. Similar story for HFDC as well, having a beat on strong loan growth as well. Its net income was up 9% to 2.1 billion. So we're seeing HFDC lose a bit of ground there, but the rest of India's big banks having a modest risk-on session, at least in the first couple of minutes anyway. Still to come, Singapore facing a tougher growth environment as increased protectionism and geopolitical rivalries threaten its tried and tested model. We're going to take a deep dive with Bloomberg Intelligence next. This is Bloomberg. Welcome back. You're watching Insight. Singapore is facing a tougher growth environment as increased protectionism and geopolitical rivalries threaten its trade and foreign investment flows. Bloomberg Intelligence now expects GDP expansion this year of 2.5% after an outsized bounce in 2025 of 5%. For more on Bloomberg Intelligence's annual Singapore briefing, let's get to our senior analyst, Sarah Jane Mahmood. So, Sarah, to what extent does this retreat of globalization create some challenges for Singapore's growth?
Sure. So Singapore really has been the poster child of globalization, and for decades Singapore has prospered on the back of global trade flows and investment. And now as protectionism does increase, Singapore's traditional role as a bridge between East and West may become slightly less comfortable. So our Bloomberg Intelligence report looks at Singapore's growth prospects to 2030 and how GDP growth could slow from the mid-single digits we saw before the COVID era to around 2 to 3% a year through to 2030. But that is above the developed world average. And despite all of the challenges that are likely to arise over the next few years, we still do believe that Singapore will remain a magnet for multinational company investment.
Yeah, that seems to be playing out now. Global companies still choosing Singapore as the regional hub. Why is that?
Yeah, so I think multinational companies are still likely to look at Singapore as its regional base, despite competition from other cities like Hong Kong and cheaper alternatives like KL. Singapore is essentially the gateway to Southeast Asia, which is booming at the moment. Singapore offers stability, a highly friendly business environment backed by a strong regulatory framework, a common law system that offers companies strong intellectual property protection and also contract enforcement. We've also got very strong infrastructure and connectivity here with world-class airports, ports, and also the RTS link with Johor in Malaysia that will open towards the end of this year. So it's a natural base for companies.
So the Singapore's financial hub, or its strength in that position, is also very important. Can you tell us about the outlook for the wealth management industry?
Yes, our outlook for the wealth management industry is very, very positive. BI conducted a survey towards the end of last year, and there are expectations for assets under management in Singapore to grow between 6 and 10% a year through to 2030. And there is actually potential for Islamic wealth to grow at a faster pace, possibly even above 12%. And we are hearing anecdotal evidence that there has been a rise in flows from the Middle East over the past couple of months as well. Now, the number of family offices in Singapore, which was around 2,000 at the end of 2024, we expect this to grow at a very healthy pace over the next few years, supported again by the strong regulatory framework and also tax concessions. While Singapore has introduced tighter anti-money laundering regulation over the past few years, we don't really think this is going to be a significant deterrent for family offices looking to establish themselves here. And to the contrary, it could actually reinforce Singapore's position as an island of stability. And on that point, I think it's important to note that Singapore is ranked as the world's third least corrupt country, just behind Denmark and Finland.
All right, Bloomberg Intelligence senior analyst Shira Jain and Mahmood there in Singapore. Before we go, quick look at tomorrow's show. We'll have a pulse check on emerging markets amid the energy shock. We are joined by Nippon Capital's founding partner, Pooja Malik. That conversation tomorrow. This is Bloomberg.